Hello and welcome to JXT Spotlight. I'm Gamika De Silva, your host. When we started this channel, we had one of the very interesting videos, even to date, that is being the best performing video on our channel. We spoke about investment versus saving. And I have the privilege of inviting the same gentleman after 1 year on our podcast, Mr. Dilshan Wirasekara, Deputy CEO of Janashakthi Group and Managing Director, CEO of First Capital Holdings. Dilshan, welcome back to JXT Spotlight, and the spotlight is on you.
Thank you, Gamika, and it's lovely to be here after a year again.
Thank you for being here despite your busy schedule. How was 2025 for First Capital and Janashakthi Group overall?
It's been an amazing year. I think one of the best years the group has seen. All our businesses have done extremely well. Janashakthi Insurance, I think, had its best year in its sort of 31-year history.
Absolutely.
First Capital also, even though our financial year is March, as opposed to December. We've had a good 6 months so far, and by the looks of it, we'll end on a strong note. And I think even Janashakthi Finance have done relatively well, piggybacking on the NBFI sort of expansion we've seen in the economy.
Also on the back of the rebranding as well.
Absolutely, absolutely. So I think on all fronts, all three subsidiaries are doing well. So JX is absolutely bound to do well as well.
Fantastic. We'll get into that at the latter part of the discussion, Dilshan. The whole objective today, I think it's on the backdrop of the discussion I had with Ramesh on the podcast. That was soon after Ditwah took by storm the Sri Lankan economy and the lifestyles as well. So I'm going to focus our discussion more on the economics because in your line of business, the investment, the market, the economic markets, that all macro factors come into play. So in your opinion, as an expert in the industry, it was a stress test for Sri Lanka. We were on the verge of recovery and things were moving decently well, and this bam, it had an impact on us. As per your opinion, what did it expose in terms of Sri Lankan economy, Dilshan?
So I think first of all, it definitely wasn't a test, Gamiki. It was the real thing. So I think we've exerted quite a bit of stress on the economy as a whole as a result of Ditwah. Ditwah today stands as possibly the largest natural disaster Sri Lanka has faced in its post-independent history. One would argue the 2004 tsunami was bigger, but I think just in terms of impact to the economy, Ditwah probably has made a bigger impact or a bigger dent for the overall economy. So it has had a huge impact. In terms of how overall in the economy that'll sort of pan out, the positive thing is that we were in a good place, Gamika. Right.
Yeah.
So as a result of being on IMF program, following a reform agenda, post the economic crisis in 2022, we had anyway come to sort of rebuilding the economy and having a growth trajectory that resulted in a few key things. So one key aspect was that we had a primary surplus for 2 years running, and I think we'll end with the third year, possibly extend it for the next 2 years as well. We've also essentially had a current account surplus also for the last 2 to 3 years, and by the looks of it, that also may continue for a few more years. So that resulted in the government or the Sri Lankan economy having some buffers that already were there in place.
Right.
If you just take government financing, I think we had a surplus financing that resulted out of significant increases in government revenue on two fronts. One on taxation, the second on customs duties. That hit record levels in 2025. So we had, I think, something like a 1.5, 1.7 trillion funding buffer when Ditwah hit. And thank God for that, right? And I think that allows the government to roll out the recovery plan without having to wait or depend on external factors or aid or anything else. So I think that has been a key element. So in my view, I don't think it really exposed any gaps. I think it showcased the strength of having these buffers and the importance of staying the course of a reform program. And I think it's important now going forward that we don't let the disaster derail us from
Derail us,
that.
yeah.
That's the most critical thing, because it's quite easy to sort of use the disaster as an excuse and go back to where you were maybe prior to 2022.
Yeah.
But that's quite important because I think we have sufficient buffers to still rebuild
Yeah.
and react to Ditwah and do what's needed, but not really slack or loosen up in terms of our fiscal discipline.
Yeah.
So I think it really didn't expose gaps.
Okay.
I think it showcased how important it is to be in a position of strength.
Absolutely. Dilshan, I think you touch a nice point in terms of having the buffer and being ready. Now, my next question is in the backdrop of now we need to start repaying our loans. The government needs to start our rebate period is over, almost coming into an end. So, given that scenario, and we are having excess cash, and I'm sure that the foreign exchange surplus is also pretty decent. We are at the levels that we wanted. So, given this scenario, what are the short-term fixes and also long-term fixes that you think from a government point of view?
So I think the short-term fix is to immediately react to the disaster, make sure the families, the people impacted, the infrastructure damaged is sort of rebuilt fairly fast. And that's what you use your buffer for. So you have that cash in hand, you make sure you deploy it immediately, there is no delay. That the citizens who were affected by this, as well as the infrastructure damaged, is rebuilt fairly fast. And I must commend, I think the government has taken steps in that direction and even in Parliament got the necessary approvals. We know there is a supplementary budget to the budget that was approved in November. Another 500 million that the government proposes for rebuilding efforts. So I think the short-term fix is that. Deploy your cash, start rebuilding immediately. However, I think the long-term aspect is more important.
Absolutely.
And I think we have to be very careful that the rebuilding effort doesn't lead us down the debt path and increase the country's debt position beyond a sustainable level. Over the last 2 or 3 years, we've done extremely well. I think the 2025 end number is that debt to GDP is down to 93%. It peaked at 110 during the crisis. So we pulled it back fairly well. I think it's slightly above the targeted IMF level of 95. So it's heading in the right direction. Now, what we should be careful not to do is to go and try to take more debt for the rebuilding effort and then find ourselves in the same situation that we were. So I think from a medium to longer term perspective, we need smart investment. We need to look at investment driven rebuilding, not really through borrowings, more sort of FDI sort of driven, infrastructure investment driven. And if we do that right, we can also build smarter, Gamika. Don't forget that Ditwah did expose a lot of shortcomings in terms of,
our systems, processes,
and landslide prone areas where housing has been there. So all of these things, I think, if we take a long-term view to correct and maybe sort of rebuild the infrastructure, but also get the people moved away from these landslide prone areas, I think then the longer term objective also will go in our favor, and hopefully the government will do that.
I'm sure. I think, in terms of estimating the impact to the infrastructure, some say it is 4.5 billion and some say it's 7 billion. So let's take the higher figure of 7 billion. As you said, the projects driven, the FDI based investments would probably be the way forward for us. Dilshan, from a stock market point of view, investors' point of view, I know that there had been some fluctuations during the last 2 months, if you look at it. Now, this boils down into the industries which are impacted and their readiness to face the future. What industries really got impacted? I know on the surface level, I can see, obviously agriculture, etc., transportation got affected. But broadly, what are the industries that you felt that got impacted the most and who will take a longer time to recover?
So I think there was probably impacts right across the country, Gamika, maybe some more than others. But I think the largest damage, if you really look at what we lost at Ditwah, I think, first of all, the loss of life.
Yeah.
That's something you can't recoup. So obviously, condolences to the families that lost loved ones. Then the infrastructure damage, I think, is the largest big ticket item in terms of impact, in terms of numbers. Then you have the agricultural aspect. While that would have had widespread devastation, that will rebound fairly fast.
Yeah.
So if you take, I think the biggest impacted would have been paddy lands, but paddy is a 4-month cycle now, and coming into Yala
April
season,
yeah.
with the rains that we've experienced, you could potentially expect agriculture to rebound in the next quarter.
Yeah.
So I think that will rebound
Faster,
than the rest. And obviously then you have the supply side disruptions in terms of goods not being able to be distributed because of logistics and all of that. That also, I think, to a great extent, authorities have done well in terms of clearing up the roads, even though some of the bridges will take much longer to build. Having alternative routes to sort of ensure supply side is not disrupted. On a economic sector that is most impacted, I think it's the SME sector as a whole. However, if you look at the stock exchange, you don't have a sort of a SME sector. We do have a SME board, just 5 companies listed on it. I think the longer term impact or the more indirect impact will probably be on the banking and finance sector. Because these businesses that were affected probably have borrowings with the banks and NBFIs and all of that. The government has asked the banks also to consider moratoriums already. The banks are still smarting from moratoriums coming off from the economic crisis and COVID and all of that. And now we'll have to maybe extend again a third round effectively. That may impact. So I think the fallout will be felt more in the banking and finance, but not immediately. It'll probably be over the next 6 to 12 months that you may see some stress. But there again, I think even the banks are in a good position. They have fairly significant capital buffers, high capital adequacy ratios that can stomach that hit. So I don't really see a huge correction even in the stock market. When Ditwah hit, the market tanked at 10%. But today, as we speak, it's rebounded almost all of that. So that goes to show also
very temporary shock.
Exactly, and also goes to show that investor sentiment isn't dented.
Positive,
investor sentiment is still fairly bullish, saying, look, this market was probably undervalued when Ditwah hit. Yes, it's taken impact, but it's still undervalued. So let's invest. So we've really not seen a major slowdown in investor appetite. So therefore, I feel the impact will be less than a lot of us think. So you did throw out a number, 4 to 7, and I think that's the World Bank estimate. World Bank estimate is 4 to 7. While that's a large number, and that's probably a good 5% of GDP, I still think we will grow as a result of the investment that will happen now, forcibly happen, because you have to rebuild. That is going to drive growth, and I think that will still generate a 4 to 5% expected growth level for 2026, and that's exactly what central bank yesterday forecasted in their roadmap as well.
Absolutely. Interesting, Dilshan. I think now that we spoke about the banking and investment, that cycle, I want to throw in a question on the inflation as well. We controlled inflation for a greater degree during 2024, 2025. Yes, we are yet to see a larger impact on inflation, but do you see inflation having an impact during the year?
Not so much. Of course, yes, we do expect inflation to go up. It's currently below the targeted level. So central bank's targeted level is a ballpark 5%. They have a range of 4 to 6%. So let's take the midpoint, 5% inflation. We, throughout the most part of last year, had deflation. Right? So we were below the targeted level of inflation. We've now creeped up to about a 2% inflation rate. And again, central bank expects that will pick up to 5%, which is the targeted level. So I think we'll see inflation pick up, but it'll be within the targeted level. I don't think it'll exceed that. However, I expect some pressure on interest rates, Gamika, not purely because of interest rates, because of also demand and supply factors. So we've seen private sector credit grow very, very robustly last year.
Okay.
Right? Far more than what we expected it to
Right.
grow. And if that growth continues, a lot of that growth is fueled by vehicle imports.
Yeah.
A lot of people say that may be a one-off. However, it may not be if government doesn't restrict. You may still see continuous
Yeah.
imports taking place, and then financing of that having to be taken by the banks and finance companies. So I think liquidity and credit demand will also exert pressure on interest rates. So our forecast is that we'll see benchmark interest rates move up slightly, maybe somewhere between 100 to 150 basis points.
Okay,
Not
right.
so much.
Not so much,
So
yeah.
it's not that you need to worry about it too much, but
But there's a
definitely there'll be an increase in interest rates is what we think.
On the backdrop, but that actually you answered my next question as well. On the deposit side, is there encouragement? I saw the latter quarter of 2025, banks and NBFIs were going after short-term deposits and giving certain benefits in terms of the short-term deposit. Why that, if you can explain it to our subscribers, and also how that will evolve during 2026?
Sure. So there was an expectation that maybe interest rates may decline further, primarily due to we were in a deflationary environment and interest rates were still fairly significantly high. If you take interest rates ballpark at 10% for a deposit last year, and you had inflation at a negative 2%, your real rate of return is at 12. Now, you don't get 12 anywhere in the world, Gamika. Nowhere in the world, right? You find me one country that has real rates of 12%, you can't. However, I think that is going to pivot slightly, and maybe the real rate of return will decline. So if you even still have rates of 10% and inflation of 5, you still have a real return of 5%, which is not too bad, which is still very competitive. And that's what we expect, that real rates of return will still remain positive in Sri Lanka, and that sort of will drive. But from a theoretical point of view, why did banks and finance companies quote more on short term? They believed rates would stay low. They didn't want to commit, but we've seen that change now. So you're seeing now the banks and the finance companies come and give longer term rates more attractive.
Yes.
And I think we'll also see probably the deposit ceiling rates that central bank puts on NBFIs, which are pegged to the government security rates, also move up. And as a result, the medium term rates I expect to sort of go up. I've already seen finance companies quoting about 13% for 3 years,
right,
as opposed to single digit for up to 1 year.
1 year,
right? So you're seeing that trend move, and I think a lot of businesses now will go and lock in long-term borrowings, preferably at fixed rates.
Okay. Does that mean, Dilshan, for the individual investors also, the government securities, etc., that market becomes attractive right now?
It will become more attractive than it is now. So you're currently having single-digit rates. I expect those to go into double-digit, but at the low double-digit territory, not really at the high rates that we've seen in the past. But definitely, like I said, 150 basis points of a benchmark increase could result in a 250 basis points in a market rate increase.
In a market rate, okay.
Right? So I think that's what we expect for 2026.
Okay, interesting. So 2026, if I look at from an investor point of view, you can segment it for foreign investors, local investors, large tickets, as well as for individual investors. What is your forecasting in terms of your viewpoint about 2026 as an investment environment?
I still think it's going to be a positive investment environment. I believe the government will continue its fiscal discipline, irrespective of the impacts of Ditwah. And I think it has sufficient buffers to sort of, like I said earlier, withstand the impacts of Ditwah. We hopefully will also see more foreign investor appetite in the country. I think if you take last year, a lot of the foreign investors were sort of wait and see. It was a new government in its first year.
So observing that.
Absolutely. It had a budget that was sort of a half-baked budget that carried forward from the previous year. So you're really seeing the full-fledged budget of this government end of last year, right? So I think now it gives a foreign investor relative comfort that, look, okay, this is a stable environment. Government has an absolute majority in parliament. 4 more years of a term left, which is a medium term, that you are not going to really expect any major
Major
shocks from
changes,
a
yeah.
political perspective, that will also result in policy stability.
Yeah.
Right?
More consistency.
Exactly.
Yeah.
So I don't think the government is going to backtrack, making Ditwah an excuse and saying, okay, now I'm going to
Now we
roll
change.
back all my sort of commitments to the IMF
Yeah.
as a result of this. I don't think that
Don't
will
think so,
happen.
yeah.
So I think we will still have a positive growth. The economy will grow 4 to 5% in my view for 2026, which then means it's similar to 2025,
Yeah.
and should do relatively well. From an investment point of view, the equity markets still do offer a discount. We are still one of the more cheaper markets. The real estate market also has seen a fair rebound. Prices are sort of increasing, especially in the Western province. So that market is also doing well. And in the fixed income side, with interest rates going up, investors now have the potential to maybe lock in medium to long term at higher rates.
Yeah.
So I believe there is still fairly good opportunities for investors, and it's going to be a good 2026.
Good investment climate as you
Absolutely.
predict. Okay. Dilshan, now just to re-emphasize some of the messages you gave at our very first podcast. Now, this is for the larger majority of our followers and the general market who are still believing in the savings accounts and the fixed deposit. Your advice to re-emphasize in terms of the importance of identifying the right tools, maybe a short answer where they should be looking at in 2026, given the backdrop what you said.
Absolutely. So I think capital markets tend to react faster to economic dynamics, and that's why I love capital markets.
Yeah.
Right. When you take the banking and finance sector, it's more historical based.
Yeah.
And it's always fixed income. It's a passive sort of investment.
Yeah.
Whereas you can grow your money in capital market related instruments much faster. One example of if you invest in equities, our market grew by 42% last year on the back of a 55% the previous year. Right? You can't get that yield anywhere else.
Absolutely.
If you look at even the fixed income space, the unit trusts that operate offer easily 2 to 3% higher than a conventional bank or other deposits. So again, there I think there is, and we are seeing the general public actually catching on to this now.
Yeah.
A lot of the investment banks have, I think, taken RQ and exposing themselves in social media, and that, and also the younger generation. I think the Gen Zs, the Gen Alphas that are coming are definitely more conscious about the market and what's out there. And even in terms of customer acquisition numbers, we see that we are opening more accounts, new accounts, than we ever had in our 42-year history.
Fantastic.
Right?
Okay.
So that's showing that there is again
Trend towards
a pivot towards capital market related investments that actually protect and enhance your savings and grow it, bettering inflation. That's how your money grows. If you invest below inflation, your purchasing power is diminishing.
Absolutely.
So I think that trend will continue into 2026 as well.
Fantastic. Hats off to the First Capital team for spearheading and growing the industry, also creating that interest and taking the message out. So my emphasis on the message is you're never too late to start your investment journey. Start with us today and experience with something small and then experience. Dilshan, I picked up, my last question is not the last question, one before actually, picked up from the New Year's, the first day of working, and you had a very interesting thought to your staff. So I'll turn it into a question and ask you so that you can elaborate a little bit more. What is the role of a larger corporate in Sri Lanka in given this backdrop of economy, and we are in that pivot point in terms of taking off? What do you believe as a business leader and an experienced person in this investment market, capital markets as well? What is your message to the larger corporates in Sri Lanka?
So I think apart from, obviously, all corporates are driven by bottom line. We can't change that. That's a key KPI we all have. Gamika, you can't run away from that because you are not a charitable institute. You are there to make money for your shareholders. So that I think is still there. But what I see lacking in today's corporate world in Sri Lanka is the sustainability angle of your business. People are not thinking long term enough, right? You're not looking at what is in the nation's best interest for you to do, what is in the citizens' best interest. How are you building up not just your business but the country as well, right? Absolutely. So I think ESG and sustainability is now sort of a key term everyone uses, but I don't think the true meaning of it is fully understood
Absolutely.
by a lot of corporates. We have a few corporates who are setting the example for sure, and I think that's really what's needed by the corporate sector in Sri Lanka, that you look at your business and build a sustainable model that cuts across the three P's. So it's not just profit, but it's also the planet
people,
and the people, right? And if we can do that, I think that's really what will make a change for us in our country.
I think, ESG will leave that topic for another day. It's a larger topic. And, again, First Capital is doing wonderful, making big strides there and being recognized in the global arena as well. Right now, my understanding is a lot of people take that as a very, surface level, maybe a marketing concept rather than the deeper meaning of ESG. Since you didn't explicitly mention your message, Dilshan, what you said is like, we are there to make profits. Let's make more profits. That's what drives the economy. I think that's the message to the corporate world I want to pick up from your speech.
Absolutely. I think that's right, because most of our corporates, especially if you're in the finance sector, pay effectively 50% of what you make as tax. So I just sort of use that as a, you make more money, you're contributing in tax, which goes to
back
the
to the country and
the
community.
Absolutely.
Dilshan, we have passed about almost 25 minutes on our conversation. Very interesting, and thank you for that knowledge that you shared. I want to wrap our conversation with your second role as the Deputy CEO of Janashakthi Group. The group has been existing for quite a couple of years and now making bigger strides as a group, stronger together. What is 2026 looking like for JXG?
Very exciting, Gamika. Very, very exciting. So we have a lot of plans, some of which obviously I can't openly discuss here in this forum. But we are looking at a couple of aspects. So one is to consolidate our three pillars. So our investment banking, our life insurance, and our
NBFI.
finance pillars. How do we grow those and expand those? That's something that we are focused on very much. But also to look at new business lines that we are currently not there in is another thing, and we've already sort of identified businesses that complement our existing businesses. We have always said we want to be a financial services conglomerate, so we are not deviating too far away from that. It is in that space, and over the next couple of months you will probably hear some very exciting announcements coming with regard to new expansion. The second point is that we are looking at regional expansion. So we've always been predominantly operating in Sri Lanka in all three of our businesses, but we believe now is the time to look at overseas markets, and we have started exploring regional expansion in certain regions closer to home, so Southeast Asia, but also Africa, that there's immense potential are markets that we are currently exploring for all three business pillars. And that's something that you will sort of see taking place in 2026. We also want JXG to also drive diversity, equity, and inclusivity. And that's something that is sort of being pushed as an agenda item at a very high board level. So that's happening also. And we want, as part of that inclusivity, to be able to have all Sri Lankans playing a part in our journey. So I think to that respect, maybe sort of looking at how the general public can participate in our success is something that we will look for 2026.
I think endorsing the purpose of breaking barriers and forging futures, we want everybody to be financially included in our economy. Dilshan, let me put a trick question to you to wrap up the conversation with. Now you're handling two pivotal, important roles. How do you divide your time? How do you prioritize?
So luckily, I've stepped away from a non-executive role, as you know, in the Colombo Stock Exchange in June last year. So that freed up a lot of my time, and that is now being devoted more towards J. So First Capital will always be my day job, and takes most of my time. But I think now I'm in a position to be able to devote a little bit more at a JXG level to drive strategy specifically, not so much operations, but just to drive strategy. And I manage because I think I enjoy both roles, Gamika. I think that's key. As long as you enjoy, you don't feel
stressed out.
Exactly.
Thank you, Dilshan. Thank you very much for that very interesting conversation, and thank you for taking time off your busy schedule and joining with us today.
My pleasure. Thank you for having me here, Gamika.
So, well, folks, that's a wrap. If you do like our content, please subscribe and follow us on our channel and leave a comment for our future content as well. So Dilshan actually touched on very interesting set of points. I'm not going to reveal everything, but few things that stuck on my head was 2026 looks like a fantastic year for investment. There's a lot of opportunity, plenty of potential. I think Cyclone Ditwah will not hold back Sri Lanka. We are poised for growth and we are in the right track. It's a consistency that we need to maintain. Secondly, from a corporate's point of view, I think we drive the economy by making profits, ensuring that the economic engine runs smoother, and getting people included. And JXG, Janashakthi Group, plays a key role in terms of inclusivity by breaking barriers, forging futures, and getting an inclusive future for all Sri Lankans and beyond Sri Lanka as well. So stay tuned for good news, and thank you very much for joining with us. Gamika De Silva signing off.